guys, hi friends. Welcome back to Shikohope TV. And this is where we say in our Zekana, we give you hope, we tell you never give up, never lose hope, and always keep hope alive. So today, guys, we are talking insurance. You have been telling me, Shiko, can you tell us more about insurance? Today, I have an expert in the house. She is here to tell us more on insurance. And let me bring up our guest. And here she comes. Hi, Carol.
Hey, Shiko, how are you?
I'm good. And you?
I am doing great. Thank you for having me here.
Yeah, we are so humbled to have you back.
Thank you. It's an honor.
Sure, it is.
Yes.
Now, can you tell us more about insurance? Or before we go to that route, just give us a little brief introduction about you.
Okay. I've been here before. My name is Carol Mina. I have said I'm a mom, I'm a wife, brother, I'm a sister, I'm a daughter. And it's such an honor to come and talk about a topic that's dear to me. I've been in the insurance industry for 13 years now. I got licensed back in the day, but I didn't go full time in insurance until 2016. So that's what I do every day. I have an agency based in Rockwell, Texas. And so every day, that's all I deal with.
Wow. So you are an insurance agent,
I'm an insurance broker.
broker.
Yes. So agents represent companies, brokers represent clients.
Oh, wow. So you present us as clients.
Yes. You tell
Wow.
me what you want, I find it for you.
Wow, wow. That's good and that's so amazing.
Yes.
Now take us through what is insurance?
Insurance pretty much is just risk sharing. So you
Mm-hmm.
take a certain risk, you share it with another person or another company or an organization. And what it does is for a little bit of money, you're covered for a bigger cost. So you're just sharing risk with somebody else or another company. Basic terms, yes.
Wow. Teach us. We want to learn more about insurance.
Okay, so you can insure anything.
Mm-hmm.
Almost anything in this world you can insure. You've had people insure their hair, their nails, crazy things. But for the common Mwananchi, we focus on the basic things. Your house, your car, your life, your health, things like those. And so insurance is like, for example, insurance in the US is not the same as insurance in Kenya. The basics are the same. Understanding the topic is the same, but how you acquire it, where you get it is different. So, for example, I'm licensed in 10, 11 states in the United States. For every state I would want to do insurance, I would have to get licensed in that state. Same thing if an agent in Kenya cannot sell insurance in the US. An agent in the US needs to understand the products and the rules and regulations in Kenya. So, or say in Uganda or Australia, or whatever else. So we don't crisscross boundaries. You just have to understand where you're selling insurance and focus on that. So my focus is in the United States and in the states that I'm licensed in. Now, the easier part about the United States, the products, for example, if you go to Kansas, the insurance in Kansas and the insurance in Alabama or Texas is not going to be so different. It's just the laws, understanding what laws we have to follow in that state.
Mm-hmm.
So, and that's why if you go to an agent who's licensed in one state, they may not be able to help you in your state if you're not in the same state. So that's the first part. So today we are not going to go into the depths of insurance in Texas or insurance in Alabama or insurance in Massachusetts. We're just going to talk about insurance in general. So there are two main fields, especially in the US. There's the property and casualty, which is your car, your house, your boats, things like those, things that are physical property. And then there's the life and health, which protects you as an individual. So it's your health, your life, accidental, dental, vision, things like those. And those are two separate licenses. So an agent who wants to sell car insurance is not licensed to sell life unless they get a license to do that. And so I specialize in the life and health. I'm licensed to do both, but I just focus on life and health because that's what I enjoy doing. I enjoy helping individuals. And so we are going to focus more on that, the life and the health and those kind of things. So that doesn't mean you don't insure your cars and your houses. So back I know for sure in Kenya, you're required to have third party insurance. And so it is in the United States. People call that's liability insurance. That is, in case you're driving a car, you hit someone, at least you have some coverage to cover that person, right?
Yeah.
So, and that's a requirement. But guess what? There are people who just drive without these things, and they're just risks. So they hit another car, or they hit someone. Now there's no coverage, and that other person now has to come out of pocket instead of their insurance having to cover that. So it's very important that even at the least, get your liability insurance. It's a requirement, but there are so many people that don't do it. When it comes to your house, I know it's not as common in Kenya as it is in the United States, but it's important. And nowadays, if you know, Shiko, even in the US, if you're getting an apartment, they are requiring you to get renter's insurance, right?
Sure. Sure.
And it just makes sense with all these accidents happening. You hear somebody's apartment burnt, and the only way you can get everything you had, unless you had the money in the bank, if you have insurance, which is very cheap, then you get that stuff back, whether it's your your clothes, your books, or whatever it is that burnt in that apartment. Same thing if you have a house. If you have a house, they require you, and if you're required to name your mortgage lender as a lien holder, right? So same thing. So back in Kenya, a lot of people say, oh no, uko atu inshurangi nyumba. Lie. Actually, a lot of people do insure their houses, their properties. Actually, even in Kenya, I know people who insure their crops, farmers who insure their crops, their animals, things like those. So like I said, you can insure anything you want. So that's on the property and the casualty side. So let's go to the life and health. I want to start with health insurance. And the reason this is, with COVID opened eyes, that people got scared. Even people who did not get COVID. You were thinking, if you get it and you're in that ICU for a week, do you understand the kind of bills? It doesn't matter which country you are in.
Yeah.
When those bills came, and you couldn't say, oh, I'm going to shut myself in a house because I don't have insurance and I can't afford the bill. You got sick, you went to the hospital. And now, do you know how many people are dealing with those bills? Many people. Now, the difference in some of the developed countries and some other countries is, for example, like in the US, you will go to the emergency room. They will treat you even if you don't have insurance.
Yeah.
Some places, and especially give an example like Kenya, because that's where we are from, you go to the hospital, they want you to either have insurance or put some money down or some collateral before they treat you. So it operates different. So you have to understand the demographics of where you live. So if you live in a country that actually requires you to have it to even get the basic treatments, you might as well just look into it. And I know places like Kenya, even here, they have the public health system. In Kenya, it's NHIF.
Yeah.
Only makes sense to get NHIF. NHIF is so affordable, honestly. If you count in dollars, I tell people it's like $5-6 a month. If you have any loved ones in Kenya and they don't have anything else, at least get them NHIF. And people in Kenya can also afford that. Don't be fooled. People can afford NHIF because it's really affordable. I'm not saying it covers everything, but it's better than nothing.
Sure.
So that's just basic insurance. Now in the US, there are several ways to get health insurance. One, you can get it on your job. A lot of jobs nowadays will just offer you health insurance. Some, and it used to be a requirement that they had to help you pay. Now they don't have to. That rule is passed on. They can just offer you, like, go get insurance from this place and you're good to go. So you can get insurance on the job. If you're offered insurance on the job, it only makes sense for you to look at it, because usually companies are able to negotiate better prices than me and you, Shiko, walking to a company and telling them, I need you to insure me, versus a company, you're working for a big company that has 1,000 people and they say, hey, we're bringing you 1,000 clients. Can you guys give us a good deal? It's easier, right? So if you're offered insurance on the job, most people, and especially our people, they are thinking, to be cut what? $50 a week? Not happening. $100 every 2 weeks? I am not. And I don't know, Shiko, you've heard people say, Mr. Gonjekangi, me, I don't get.
Yeah.
You hear that all the time, right?
Yeah, I heard someone say, I have been paying this insurance for 4 years and I have never gotten sick.
Yes,
And he was like, I'm getting out of this.
because
And
they
he
feel like they're
opted
wasting
out.
money. So, but the thing is, if you have health insurance, the least you can do is get your annual checkup.
Sure. Mm-hmm, mm-hmm,
So many of us, and especially we, tend to wait till things get out of hand. Because think about it, things like diabetes and high blood pressure, do you know how easy it is to detect? You actually detect those things. That's why you go to a clinic or a doctor and they say you're pre-diabetic, you're pre-hypertensive. You need
mm-hmm,
to either watch your weight, watch your diet, watch your lifestyle before it becomes full-blown diabetes. And so you wonder, how do people skip from they are healthy to
mm-hmm.
now they are diabetic to the point of they're almost dying?
Yeah.
It's because they did not get checked. But if you
Yes.
get in the habit of, if you have insurance, just go and get checked. If you have an ACA plan, which people will call Obamacare, but even on your job, generally they are going to be ACA plans, your
Mm-hmm,
preventative care cover is covered 100%. That's your annual
mm-hmm,
checkup. Going to get your blood pressure checked, going to get your blood sugar checked, things like those. So it only makes sense for people to get that. So number one way to get insurance is through your job.
mm-hmm.
Only thing with health, you can pay for 2 3 years and you're saying, oh, I don't use it. But the one time you use it, especially in the United States, it takes one incident to wipe you clean.
Sure.
2 3 days in the hospital can cost you $80,000 to $100,000. Very, very easy. It's crazy.
Yeah.
So if you're thinking you're wasting money, it's time to rethink that. The second
Mm-hmm,
way to get health insurance is through the marketplace. So the marketplace generally used to be open November 1st to December 15th. Then we went through pandemic, and then now we have a new president, and he opened up, and we've been doing our special enrollments, which are going to close on August 15th. So if you're
mm-hmm.
there and you do not have health insurance, it only makes sense if you didn't get it through a job. Then shop through the marketplace. Why is that very important? That's why you have had Shiko people say, I'm paying $20. I'm paying $10. Oh, I'm not paying anything. I just put in an application. It's because if you go to the marketplace, it has the ability to find if you qualify for a subsidy. A subsidy is somebody else helping pay part of your or all of your insurance. So on the
Mm-hmm.
job, usually you'll get a subsidized healthcare. In the marketplace, if you qualify based on your income and household size, you might be able to get a subsidy. So it only makes sense. And if you call any agent that does health insurance, it takes us about 5 10 minutes at the most to run you a quote, for me to tell you how much it's going to cost you. And then you can make a decision. Shiko, do you know how many people come and tell me, oh, you know why I never got health insurance? I thought it was going to cost me $200 300. And then we do it. I'm like, no, you're only paying $10. You're only
Mm.
paying people. I have families of 5 who are not paying but $20 a month.
Wow.
It's not because the insurance is cheap, it's because the government is subsidizing their health
Mm-hmm.
insurance. So that's number two way for you to get health insurance, through the marketplace. Generally, you can go through an agent or you can go directly to the marketplace, healthcare.gov, and do it yourself. It kind of gets confusing, especially if the first few questions they're going to ask is, they'll ask you about citizenship or things like that. And
Yeah.
depending on where, especially if you're not a born US citizen, then you have a few more questions to answer. It gets
Mm.
confusing. People get lost in that whole mix up. People who are self employed, it gets a bit complicated. But that's
Yeah.
why you have people like us to help you. And by the way, we don't even charge. These are
Is it
free
free?
services. Yes,
Really?
it's a free service. I don't understand why people don't ask for it.
Wow. Maybe we think that you charge.
No, it's free. All you have to do is call me, and I'll tell you how much your insurance costs you. If I have to do your application, you still don't pay me. You just pay for your
Wonderful.
insurance.
Wow. Good to know that.
Imagine that.
Wow.
Yes. So call us. We're here to help you. We don't charge for these services. The other way, if you don't get those two, is private insurance. So there are people who absolutely they don't get insurance through a job. They do not qualify for marketplace, or marketplace is not the best place for them to go.
Mhm.
Then the only other way then is you go in the private market. There are different types of private plans, but then personally, I go to that as the last option. And so there are options. There is no reason for anybody not to have health insurance unless absolutely that you can't completely afford it or something happened and you're not able to get it. So ask questions. We do consultations are free. If I do a quote for you, it's free. If I have to do the application for you, it's free. We don't charge for these services. We actually just help people, period. So when you see us advertised there, we just help you people to get health insurance. So some of the things you want to know about health insurance when you're getting it, number one is the premium. So if you go to people born here, they or even some specialists, they'll just walk you through. They're like premium, copay, co-insurance, all these things that people are like, what is that? So I'm going to walk you through the basics. Premium is how much you pay. It doesn't matter whether you're here or you're in another country. Your premium is how much you pay a month. And you can choose to pay that every 6 months or it's up to you. But insurance is calculated per month. So your premium, when I tell you your premium is X amount, is how much you are paying. I said subsidy is when how much somebody else or some other entity is paying for you. So in the marketplace, it will be a tax credit, and that's your subsidy. On the job will say we pay 50% of your insurance or 75%. It's a subsidized plan. So the job subsidizes your insurance. So premium is how much you pay every month. Deductible. So I hear this all the time. What is a deductible? So you know, you have a car, when you go to get car insurance, they tell you, Shiko, you have a deductible 500 or 1,000, which means something happens, you're responsible for. The deductible is how much you're responsible for. And people forget that. So there are certain things, especially with health insurance. Car insurance is different. Car insurance, your deductible is 500. You have an accident, insurance is going to automatically deduct 500. Health insurance, on the other hand, there are certain things they will tell you, we'll pay this before deductible or we'll pay this after deductible. So you just have to understand, are they paying, for example, preventative care is 100% before the deductible. They don't consider the deductible. There are certain things then they will say a surgery is we are going to pay X amount after your deductible, which means if your bill is $1,000 and your deductible is 500, you're responsible for the 500. Then there's something else called copay. Remember, when you go to the doctor, they will tell you, oh, your copay is $10. That means for every time you walk to your doctor's office, you pay $10 or $15 or $25. Usually on your insurance card, it's going to tell you what your copay is. There's a copay for PCP, which is your primary care provider, and specialist. So if you go to your primary care, usually it's cheaper. If you go to other doctors, it's going to be usually more expensive. Yes. And that doesn't mean you can't go to a specialist, because sometimes that's what you need to go to. So you just have to understand, copay is what you pay when you walk into the doctor's office. Co-insurance, though, is a percentage. Your insurance can be an 80-20, a 70-30, or a 60-40, which means insurance pays 80%, you're responsible for 20%. So you have a bill for $1,000. Insurance says we are on an 80-20 co-insurance basis. So insurance will pay 80%. You are responsible for 20%. So you have to understand what your co-insurance is. So this is where I get questions a lot of times. Why is it I'm paying for insurance and every time I go to the hospital, I get a bill? Because you're paying for one of those. You're paying for a copay, which is the amount you pay when you go to your doctor. You're paying for co-insurance, or you're meeting your deductible. So you just have to understand. All your insurance cards at the back, they have a member services number. People get used to calling that number. If you do not understand a bill, get used to calling that number and ask questions. Sometimes billing is, they're human beings like me and you. They can make mistakes. So if you don't think your bill is right, just call them and ask them for an explanation. And usually when you have a bill at that doctor's office, they will send an explanation. They will say, on this day you went to Dr. So and so. This is what Dr. So and so did. This is how much they charged. This is how much insurance paid. And this is what your responsibility is. Then it explains to you what your deductible is, what your copay was. It's an explanation. But you know what people do usually? They throw those letters in the trash.
Yeah.
And they never read them. I keep every one of mine. I tell you. And you know why I do? Because at the end of the year, you want to know if you met your out-of-pocket maximum. So your insurance is going to tell you your out-of-pocket maximum, say, is $1,000, which means there's co-pay, there's co-insurance, there's deductibles, there's all these monies you're paying. There's a maximum you can pay or a maximum you are responsible for. So if you say your out-of-pocket maximum is 1,000, so even if you had surgery and it cost 100,000, as long as you meet your out-of-pocket maximum, insurance kicks in 100%.
Wow.
That's why it's a very important number to note. Out-of-pocket maximum, especially if you're thinking you have something major coming up. You're about to have a child, you're about to have surgery, you're about to go through some major health issues or something. Know your out-of-pocket maximum. Why is that important? Because whatever the case is, usually you're always going to meet your out-of-pocket maximum. And so you want to know if, say, there are plans that have a $10,000 out-of-pocket maximum, you want to know that you need to save that amount of money. And this is where things like HSA, health savings accounts, come in. And if you know that your out-of-pocket maximum says 10,000, then you start saving money. And you can open a HSA with any of these brokerage firms. And you just start putting money aside every month. So you know, or you're thinking you're going to have surgery or something is about to come up, you start saving money on the side. And when that bill comes, you just swipe the card.
Yeah.
So those are important things to know about health insurance. I know it's a lot of information, but keep coming back to this video. Call us. Not every agent is licensed and certified to do health insurance, and usually most agents are honest. They're going to tell you, I'm not a specialist in health insurance. It's not something I quite understand, and that's okay. Just find somebody that is. And if you don't, call us. Go online. We are not too many of us who are certified to do the marketplace. But just because somebody is licensed to do health doesn't mean they're certified to do marketplace insurance. And you can tell why. It's a lot of jargon. It gets complicated, but we're here to help. It's free services. Ask. Let us help you get the proper health insurance. Don't sit there suffering and not getting what you need. Now, there's another way people get coverage, Shiko. There's hospitals, for example, in Texas, in Dallas County, you have something like a Parklands plan. Or JBS, or in other states. Almost every state has this one healthcare system that offers healthcare to low-income people. So if you don't qualify for all these insurances we said, then you go to these healthcare systems and apply for coverage through them. Remember, this is for low-income people. Yeah. And you have to prove income. So back in the day, there were no computers. There was no way systems. You made money, you did your taxes were done and put in a file. Nowadays, to do your taxes, everything is electronic. So remember, everything now can be verified electronically. So don't go lying to these systems about
they will get you.
Imagine, right? Don't lie to the system that you're not making money if you know you're making money. So if you don't qualify for health insurance, find the healthcare system in your county that serves low-income people. They will tell you and by the way, most of them are like some of the best. Like in Dallas County, Parklands Hospital is one of the best. It's actually one of the best hospitals in the country. Yeah. People undermine that hospital, but it's a great hospital.
It's a big one.
Big, it's great. It has amazing doctors. And so if you do not have the financial capacity to get health insurance, go to their finance department and apply for their healthcare card. Yeah. and they're going to help you. As long as you qualify, they're going to help you. Now, for children 18 and below, they can get Medicaid. This is low income people. This is government and healthcare systems helping you people get insurance without you having to pay. So 18 and below, if you are in a certain income bracket, then your children will get that. Now, there are people who are, say, you're making slightly above, the poverty level, then your kids are going to get cheap. All you have to do to know these things, go online and apply for those things.
Sure.
Send proof of income, let them verify you, and guess what? If you qualify, you qualify. And
and you enjoy those free healthcare.
I know, right? And a lot of people get them. A lot of people get these
Yes,
things.
they do.
Yes. If you're over 65, now you're supposed to apply for Medicare. So does everybody qualify for Medicare? No. To qualify for Medicare, especially if you live in the United States, you have to have worked 40 quarters, which is 10 years. You have to have filed taxes. So what happens, all those people working at Chinyameza, and you turn 65, and you're like, oh, I turned 65. Just because you turn 65 does not automatically qualify you for Medicare. The other way is, if you haven't lived in this country long enough and put in money in the tax system, then they're not just going to qualify you for Medicare.
But now, living long enough, like how many years before I turn 65?
You have to have worked and filed taxes 10 years, which is 40 quarters.
Oh my goodness. So if I came to America when I was 56, I will not qualify for Medicare.
You have to wait till you have worked 10 years.
Oh my goodness.
So if you start from 56, you're going to qualify when you're 66.
Okay, because I have not paid enough taxes, right?
It's not even amount, it's participating in the system.
Oh.
Yes. So you have to have filed taxes for 10 years. So I hear people go like, oh, I'm turning 65. And by the way, when you qualify for Medicare, they actually send you a card. It's not something you ask or push for. You just get it.
It just come.
Yes. Now, there are supplements. Medicare doesn't cover everything. And that's why people have to get supplements. Now, there are agents who are specialists in that field. I'm not a Medicare specialist just because I don't deal a lot with people over 65 for health insurance. But if you need one, we have organizations that do insurance for those people. And so they have to get supplemental plans for their Medicare, because Medicare doesn't cover 100% everything. So that's healthcare in a nutshell. Any questions that we need to look into or address?
Yeah, about healthcare. Do I cover even my children separately, or I will cover them under my cover?
So if you're getting insurance on the job, they give you the option to do that.
They give my dependents.
Yes, to include if you have a spouse and dependents. If you're doing insurance through the marketplace, you have, whether you're applying for them or not, you still have to put their information. And that's why I tell people, if your spouse doesn't have insurance, it doesn't make sense for you to not include them, because you have to include them on the application. On the job, you don't have to include them on the application. It's a choice you make. In the marketplace, you have to include everybody that's in your household, your spouse and your children, whether they need insurance or not. And it's a question it asks. So Shiko is married to Mr. X. Does Mr. X need insurance? Shiko has this child. Does this child need insurance? It's yes or no. If you say no, the application just moves on. So with Marketplace, you have to add them to the application, whether they're applying for insurance or not. So it only makes sense to add them.
Sure. And will me adding them increase my deductibles or forfeit?
First of all, yes, it increases your premium, how much you pay per month. Because remember, insurance covers an individual. So whether, and by the way, it's individual is you, Shiko.
Yeah.
If you have a spouse, your spouse, and then children are covered under one. So whether you have one child or 5 children, usually the price is the same. So that's just something a lot of people get confused. They think you add a second or third child, your insurance goes up. No, It's individual, spouse, children.
Exactly.
Yeah, whether you have one child or 5 children, generally it's going to be the same.
Okay.
What other
Now,
questions?
yeah, that one is well explained because some people are like, hey, I maybe have like 6 kids. That's so much money.
There may be some plans that limit the number of dependents you can add, but usually they will tell you that from the get-go. But by the time they limit, I think the limit I've only seen is 8 or something like that. So not 2, 3 kids. 2, 3, 4 kids are under the same plan.
Okay, and when are the insurance application open? Can I apply any time of the year?
No. On the job, they have benefits enrollment seasons, and they're going to tell you this is when you can apply for your benefits on the job. In the marketplace, like I said, it used to be November 1st to December 15, but this year the new president opened it up. And so we have open special enrollment that's going to end August 15th. So if you need health insurance for the year 2021, for the remaining months, this is the time to apply for it. You only have 1 more month to apply. Private insurance, that one you can apply anytime.
Okay. Wow. Take us through the life insurance.
Life insurance, the topic that people do not like talking about, but we have
but
to.
We have to. We have to.
You know, Shiko, when I was younger, I would hear about insurance, and people will say, if you're religious, please forgive me, but people will say, Jesus is my assurance.
Yeah.
And it took me a while to go like, what exactly are these people talking about? I mean, this has nothing to do with religion or how you believe anything. Through this, me, you, everybody else, we are going to exit this physical life at some point. And so whether we plan for it or not, it's going to come to that point.
Yes.
And the saddest part about not planning is the people we leave behind. And last time when we talked about money, I said, once you start thinking about money, why you work, why you do what you do, there's a reason, be it your children, be it your parents, be it your siblings. There's a reason why you make money. Because somebody or something or whatever it is, there's that dependence. So when it comes to life insurance, you start thinking, if something happened to me, Carol, today, if something happened to you, Shiko, today, who is going to suffer? Your children, my children, our spouses, our parents. But remember, that's why it doesn't matter whether it's Kenya or here. Somebody dies, guess what people are doing? Fundraisers.
Yeah.
And I've said fundraisers are not necessarily the way out. Why? Because if everybody was to just get the very basic, if you don't need much else, if you don't have dependence, you know, nothing else matters, at least you want to be buried. As you've seen people die in the diaspora, regardless of the country. And then people say their wish was to be buried in Kenya.
Yeah.
And I have asked this question. Where they wrote that wish, did they write where the money for shipping them to Kenya was going to come from?
No.
So how is that? Like, it's like me coming to you, Shiko, and saying, I want a Maserati. And I leave it at that, and I don't want to do anything about it. So am I expecting you, Shiko, to buy me that?
And then you let me because I like Carol said this is what she wants.
Okay. And I'm always waiting for people to go like, and so where's the
that's all. So I have to work hard to get what you said we want.
Okay. There's wanting something, but did you plan for it? So you want me to stop my life and take care of something you wanted that you did not care enough to plan for?
You just said and you vanished.
See, and we're carrying these burdens as a community. And at some point, now, the thing with, especially like if it happens, say in Kenya, people have this Harambee spirit, and people will come and if there were no hospital bills or anything like that, then it's easy, because you're just from, the funeral home to your home, nothing much. The neighbors bring the warus and cabbage and cook the lunch, and it's a done deal. usually nothing expensive. But if somebody dies, and that doesn't mean if you're in Kenya, don't get life insurance. Why? Because if you have children and something happens to you, who's going to take care of your children? How are they going to?
Your relatives.
With what?
Nothing.
Your relatives are barely making it with their own
Yeah.
life. So why would you want to pass that burden to somebody? It's already a burden. For example, something happens to one person and those kids have to go live with their auntie who has another 3 kids. Like 3 kids and her 3 kids is 6 children.
Yeah.
It's already hard enough to take care of 6 because she had only planned for 3.
Mm.
So don't you think it would only make sense that you have certain things in place to help this person that will take care of your children?
It is wise to get one.
It does, right? So it doesn't matter whether what country you live in. It just makes sense.
Yeah.
Now, that's why people say, oh, but I'm single. I don't need coverage. I don't need this. But who's going to pay for your casket and your clothes? And now we have to do a GoFundMe, a Harambe. And the saddest part is if somebody gets sick, and remember we just talked about health insurance. If they didn't have good health insurance, or they did, and then they pass on, now you just passed 2 major burdens: a hospital bill and a final expense bill.
Yeah.
And then if you had dependents, now somebody has to take care of your dependents. All I say is, let's stop pushing these burdens to other people. At the bare minimum, because there's always going to be some sort of a burden. Either way, when somebody passes away, it's sad. And there's always going to be a burden passed on to somebody else.
Yeah.
Especially if you have young dependents. And so it just makes sense that you start working on these kind of things. So the other thing I've heard people say, but life insurance is so expensive. You know, Shiko, you can get life insurance for $20, $30.
Wow.
$1 a day.
Yes. Yes.
And you get enough and get it out of the way. So whatever country you live in, just educate yourself what's available in that country, and then how do you get it. So like I said, I want to focus back on the US because that's what I know best. So in the US, we have 2 types of life insurance. We have term policies and we have permanent policies. Term is just that. You get it for a term, a 10, 20, 30-year term. And once your term is over, your insurance is over. I've always said it's the equivalent of renting an apartment. You rent an apartment for a year or 2 years, right? Then what happens when your lease is over? You either move out or renew, or you buy a house.
Yes.
Same thing. So either you renew your term policy, or you get another one, or you go to a permanent plan.
Yes.
So same concept as leasing or renting an apartment. That's a term policy. So people ask, so why would I get a term policy? One, because it's very affordable. You get more for your money. And generally, it's a good place for people with young families. So if you have young kids, if you just bought a house, if you're just starting off life, if something happens, say if you're a mom of 2, 3, 4, 5 children, something happens to you, you have more responsibility versus a young single person who doesn't have anyone, right? So it only makes sense that you get enough coverage, and you can only get what you can afford. We talked about money previously. And when you were doing your budget, you figured how much money you can put into these kind of things. So if all you have is $30, then just buy life insurance that fits your $30. Because if you start buying more than you can afford, then at some point you get tired of it. And guess what? You drop it. Now, term policies do not accumulate cash value. They don't have much else to it other than it's a life insurance policy. But we also have living benefits. Living benefits can be on a term policy or a permanent policy. And I'm going to discuss living benefits later on. So those are term policies. It's straightforward. Life insurance, very easy. Applications are so straightforward, they're easy. Permanent policies, on the other hand, there's different types. There's universal life, which can be a guaranteed universal life, an index universal life, a variable universal life, those kind of things. Then there's whole life. There's guaranteed issue. So depending on why you want a permanent plan. Why is it a permanent plan? Because it covers you all your life. Remember, a term covered you for either 10, 20, or 30 years. Permanent covers you for all your life, be it 10 years or be it to 100 years. It's going to cover you all your life. That doesn't mean you have to pay for it all your life. You can actually pay it upfront and you're done paying for these permanent policies. So you have to ask yourself, why do I need a permanent policy? One main reason why people get permanent policies is because they have cash value tied to them. So it's like having a savings. And so people, if you have extra money, you decide, I'm going to get life insurance, but I'm also going to start building some money in this. It's one of the best ways I know you can start building wealth for generations. Why is that? Is because it doesn't make sense to get a term policy on a child. But if you have the money to do it, why not do that for your child when they're young? And you start them on a small policy that increases in coverage. And when they're older, they just take over. They've built that. I don't know if you've ever had somebody say, oh, I pulled 100,000 out of my life insurance to buy a house. People do that because their parents started them when they were young.
Yes.
Started putting money into these policies. Or by the time they are done with college, pretty much their life insurance, part of it is paid off, and now they're just accumulating money in them. So people use them as wealth builders. People use them as generational wealth paths where you put money in it and you give it to your children. Remember, we said back in our parents, our grandparents, great-grandparents, they used to pass wealth in form of land.
Yeah.
Now, our children who didn't know, they don't even know what to do with a flower bed. So I don't know how people are passing on acres of land to their children who can't even take care of a flower bed.
Yeah.
And so you have to start rethinking, if these kids don't know what to do with land, then it doesn't make a lot of sense to pass wealth in form of land. That doesn't mean you cannot. If you teach your kids the right way how to go about land, it's fine. But some parents, even our generation, some people don't know what to do with land. So if you don't know what to do with land, how do you expect your children to know what to do with it? So you have to diversify. And we never had this. I said these are conversations that we never had with our parents. Diversified portfolios. So you can have land, it's good, but then you can also pass wealth in different ways, in form of investments, in form of real estate, in form of life insurance policies. People do that. And so that's why you've had, and if somebody says, so what plan is good for my child? Then it's going to be a permanent policy because they're young. You pay for it and it starts building money that you can pass on to them. Some parents will fund it to where they're able to pull money to take their children to school. The thing with permanent policies, for them to make sense, you have to be able to fund them the right way. So remember when I said if you have $30, then just go for a basic policy for an adult, because it's not going to make sense to do a permanent plan if you're not able to fund it. Term policies are very affordable. Permanent policies, on the other hand, are more expensive. So it's the difference between I want to drive a car. Should I drive a Toyota or should I get a Mercedes? Both are cars, they'll do the basics. But there are certain things a Mercedes may be able to do or look like that a Toyota might not be able to do.
Yeah.
So both of them are going to do the basics. In this case, it's life insurance. It's going to have life insurance in it. But permanent policies, because they're higher end policies, you're able to accumulate money in it. So should single people get it? By all means, yes. Remember when you're young, your insurance, because there are several factors that affect your insurance. Your age. How old you are determines how much you're going to pay. Your health. Your height, your weight, what medications you're taking. And the most unfortunate thing I have seen is people who don't even know, like I said, people who don't even know, say they have diabetes. And then when they go apply for life insurance is when they find out that they have it. Then you're very high risk because now we just found out something that you did not even know that you had. And people say, so if I have diabetes or high blood pressure, I can't get insurance. No, I did not say that. You can get it. We have so many people. As long as whatever you have is under control, You have high blood pressure, you've had it for 10, 20 years, you take medication, you've never had any incidences, then it's not going to count against you. Versus you have high blood pressure, you just had a heart attack. Those two people are not the same. Both of them have high blood pressure, but their risk is not the same. Another thing is your family history. So if in your family you have a history of heart attack and cancer and strokes and things like those, then it counts heavier on you because you're higher risk. And so they start wanting to ask questions like, did anybody die under, usually some companies will ask under the age of 60, 65 or 70. And if somebody died under that age, then it counts against you because you carry the same genes.
Yeah.
You're higher risk. So people don't get mad if insurance, and as an agent, I can only ask you the basics, but insurance is going to do what they call underwriting. They're going to do their due diligence. Because at the end of the day, if you give them your $30 and you have a $500,000 policy and you die tomorrow, imagine they have to pay that $500,000. So they want to know, what kind of risk are we insuring? So they're going to ask questions. Because once the contract is bound, once insurance companies get your money, even if you die the next day, then they're obligated to pay. The only policies that do not do that is guaranteed issue policies. And generally, they will tell you we have a 2-year waiting period. Most of them have a 2-year waiting period. And they'll tell you
for what?
which you pay for insurance for 2 years before it kicks in.
Wow. What if I buy it before the 2 years are gone?
They give you your money back, and usually they'll tell you we'll give your money back in 10% or we'll give your money back in 5%, something like that. Now, the people who apply for those kind of policies, Shiko, are people who already have something going on. So if you already have, say, cancer, you had a heart attack yesterday, you had a stroke, that doesn't mean you can't get insurance. You're going to pay more for it, and you're going to have a waiting period, because insurance is saying we don't want to cover you and then you die on us tomorrow, because we already know you're closer. That doesn't mean, and I've had people say, but oh well, somebody had cancer, they survived 10 years. Yes, you can survive forever. I'm just talking from the insurance end of things. They're looking at you at high risk. So, and most insurances, if you've had cancer, they're going to have usually a 5-year of clean bill of health before they can cover you as a regular person. So those are questions that you're going to get asked by insurance companies to know where that stands.
Wow. Carol, can you tell us how much does a life policy, the minimum that we can pay for a life policy? Not the life policy, the permanent.
So the permanent, remember, the permanent carries life insurance, and it carries a savings to it. And so when it comes to permanent, it's usually more of a plan than just getting life insurance. Can you get insurance for $80? Yeah. But then that means you're not building much cash value in it. But yes, you can get that. So depending on your age, remember, so we can have 2 35-year-olds or 2 40-year-olds, but the insurances are not going to be the same, because if you have a 40 and a 40, one is sick, one is healthy. One has a history of certain things and one doesn't. Another thing that affects, one smokes, the other one doesn't. The insurance is not going to be the same. So what we can do, even any agent, what they can do, we can only give you quotes based on the information, basic information you give us. Insurance has to do their own underwriting and go research you as Shiko, me as Carol, and say, I know Carol said she's this, but they're going to go back, they're going to look at your medical history, they're going to look at your prescription history. If you don't have medical history recent, they're going to want to do their own labs. And they're wanting to know, usually they'll do like a urinalysis, which tests, your kidney performance, or test your blood. They will want to know. So, if those kind of things affect the pricing. So that's why I said you start from the basic and you move forward. So give me your budget and I'll tell you what your budget is good for. But also, there's ways to calculate how much insurance you need. So same thing, you have 2 scenarios, 2 40-year-olds. One has 2 kids who are 2 and 3 year old. The other one started early. They have a 20 and an 18-year-old. So you see this one who has 20 and 18-year-old, they don't have much responsibility because their kids in 5-10 years, they're independent.
Yes.
So they don't need as much insurance. If anything happened to them, they only need a lot of insurance for a shorter period of time.
Mhm.
Another thing is, say you bought a house. So I've told people this, a house is going to be one of the biggest investments you're going to make. So if you buy a house, you want to know that if something happens to you, that your children don't lose it.
Yeah.
So if you go buy 2 40-year-olds, one buys a $200,000 home and one buys a $500,000 home, then your need for insurance is different. Because then you want to know, if I die, do I have a mortgage, and do I want my children to continue with this, or do I want my family, my brother, my sisters, my auntie, who would I want to take over the house, and would I want to just have the house paid off completely? Then do I have dependents? Do I have children? Do I have nieces and nephews who rely on me? And how old are they, and how long are they going to rely on my income? And you just calculate it based on that. If you have children, if something happened to you, you have to think, do you want them to go to college? Do you want them to continue in the same school they're in? Because then if something happens to you, you want to know that there's money to take care of that. And then if you have debt, if you have, say, credit card debt, you have a car note or things like those, or a business loan, you want to know that if something happened to you, then your dependents or your loved ones are not being left with this burden. So that's how you calculate how much insurance you need. The other thing I said I was going to talk about were living benefits.
Yeah.
Living benefits are very important. So when you're buying insurance, always ask your agent, does my insurance have living benefits? Not everybody qualifies for them. Why do I say that? Because if you have certain health conditions, insurance companies can say, we're not going to give you that part of the coverage. So for example, if you had a recent cancer case or a heart attack or a stroke, they can say, no, we are not going to cover you for that. What are living benefits to start with? It's a rider. It's an added benefit to your life insurance that you're able to use while you're still living. Which means, if usually it has 3 components to it: a terminal illness, which if the doctor says you have 1 to 2 years and that's it, you've been diagnosed with cancer, or you just got a stroke and things are looking south for you, and the doctor says you only have 2 years, then that's a terminal illness. If you have a chronic illness or critical illness, chronic can be kidney failure, it can be cancer, and it's because it's not always that you have cancer that you're going to die. You can just be going through treatment and things like those. Critical illnesses also. So things like those, terminal, chronic, and critical illnesses. If you're not able to, you're in an accident and you're not able to take care of yourself, somebody has to feed you or move you from your bed to the couch or things like those. So you've had people say, I pulled money from my life insurance. That's usually what it is. It's money that you're able to pull while you're still living. And actually, this is going to happen to more families than actually somebody dying. Because think about it. How many people have you had have cancer? People who've had heart attacks, kidney failure, stroke, people who've been in an accident can't take care of themselves. So if you have life insurance that has living benefits, you're able to pull money. And usually it's a maximum of 90% of. So if you have $500,000, you're able to pull up to 450,000.
Wow.
So, and that's why you've had people say, oh, I was able to pull 5,000 a month to pay for my bills, or I paid my hospital bills using my life insurance. That's what it is.
Wow, that sounds better.
Yes. So ask, whenever you're buying insurance, ask your agent if the insurance has living benefits. Like I say, not everybody qualifies for it, but if you do, it's going to be the best route to go. Generally, it doesn't cost any more, by the way. It doesn't cost more than, so most companies, the companies that do it, don't charge you a whole lot. It may be $1 or $2 more. You go to a company that doesn't offer living benefits and a company that does, it may be a $2-3 difference. So it makes sense to just get it.
And can I ask this question, Carlo?
Yes.
When we are filling forms on healthcare insurance, there is this question that we asked: do you smoke?
Yes.
Why do they insist on smoking?
Because smokers generally will get higher rates.
Uh-huh.
You know, smoking comes with a lot of health issues,
Yeah.
respiratory disorders, and things like those.
Uh-huh.
And so, general, even with life insurance, it's because you're just higher risk if you're a smoker.
Mm.
Yes.
Yeah. And then they say, is there anyone in your household that smoke? A question is like that. Anyone in your household, not necessarily you, anyone else. Did you get my question?
Yes, I got your question.
Uh-huh.
So, some I haven't seen that being asked lately,
Mm.
but usually it's to do with secondhand smoke, but also is if you're applying for insurance for your family,
Yes.
then they would want to know does somebody in the household smoke.
Oh, yeah,
But
yeah,
if you're
yeah.
being individual, generally not.
Oh, yeah.
Yeah.
Maybe the problem that I got was because of my family. That's
Yeah.
why they asked that
If
question.
you're filing, yeah, if you're getting insurance for a family, yes, they will ask.
Mhm.
Mm-hmm. What other
Wow, wow,
you have?
wow. And before we end this video, Caro, can you tell us why we don't see Wazungus do fundraising when there is a death case in their neighborhood?
Why you don't see them do fundraising? Because they have insurance. That's
Because the
simple.
fundraising are left to us.
Because they have insurance. You know, if you go to a job and and somebody dies and they say, "Oh, we are collecting money," you've seen people give $1, $2, because in their head,
Yes,
we're contributing money for flowers and a card. They
yes,
think we are weird. Like, what do you mean you're contributing money for a funeral? That's unheard of.
yeah.
Yeah, they because you know what they do? If you don't have insurance, they just get cremated. It's a few hundred
Mhm.
bucks, and they're going to cremate you in the cheapest way possible. Because if you don't have the money, they don't carry the emotions we do.
Yes, they
Yeah,
don't.
they figure if you wanted to be buried well, you should have planned for it.
For it.
Since you didn't plan for it, we just burn you, put you in a little jar, and we are done. We'll put it on the fireplace. We won't even
Yes,
find a
over
scary
there.
thing. Mm-mm. So Americans don't hide those emotions we do. But
They
remember,
don't.
and I've said this, we are raising a generation in a country that has that attitude. So if you think these children are going to be doing fundraisers for y'all, you'll be surprised, people.
Oh,
It's
yes.
these kids, they're like, fundraiser, Harambe, for what? Are you kidding?
Mhm.
Do we have to do
That's
it?
embarrassing.
Yeah. Why do I have to ask my friends for money?
Yeah.
Yeah, that's how they are. So you know, fundraisers are going to end with our generation.
Oh, yeah.
So you better do something.
Sure, sure. Thank you so much, Carol, for coming. Do you have any other thing you want to share before we end?
You know, I can talk about insurance forever.
I
It's
know.
my happy place. So no, I think we covered the basics. And like I said, depending on the country you live in, seek an agent in that country that can help you. And also, it's easier. So with insurance, what I have found, there are two types of agents. There are agents who represent a specific company. So
Mm.
if I'm an agent for XYZ company, I can only sell you what XYZ offers. If I'm a broker, like I'm a broker, so if Shiko, you come to me, has nothing to do with any of the companies. I represent like 100 and something companies. So it's not
Mm.
about the companies, it's about what works best for Shiko.
Mm.
What works best for her family, what works best for her health. And then we go with that company. And that's why I tell people, say for example, we start a policy, we go to company A and they give us a headache. Oh well, move on to company B.
Mm.
There are all these companies that can offer services. So, and I believe it's the same thing regardless of the country you live in, whether it's in Kenya, Australia, UK, whatever it is, it's going to be the same thing. So my preference is people who actually are brokers. They represent different companies because then they represent your interest as the client versus the
Mm.
interest of a company.
Wow.
Mhm.
Thank you so much, Carol. We have learned a lot.
Thank you.
Yes. And you know what? The best thing you told us is that you don't charge for consultation.
Not just consultation. If I do your application, I don't charge you neither. It's free.
So so now we know where to come to get the information more. Maybe I have some other issues I want you to clarify on to me
Mhm.
privately.
Yes.
I will just come to you, and I'm glad that you are here.
Yes. You'll pin my number 214-210-1112. That's my office number. Generally call me and I'll get back with you. If I'm not able to pick up, I'll call you right back. And whatever questions people have, just ask. Even if you have a policy that you don't understand, we're here to help. The goal of this is to help our community become a better community, is to help educate people so that we are not in this cycle of just doing fundraisers and fundraisers and fundraisers, because at some point we are going to burn out. We can only do so much as individuals. And so to avoid burnout in our community, we have to start taking personal responsibility. And that doesn't mean, Shiko, you've had people who say, like even in Kenya, there are limits to health insurance. And they will come and say, our coverage covered X, say 2 million, and we've maxed out. You see, that's a different situation.
Yeah.
When somebody comes and tells you, we as a family have done ABCD, our insurance, we have maxed out, now we need help. That's a different scenario versus from day one. Mtu amelazwa hospitali, tumekimbia, we need money. That's where the burnout is coming from, when we're having to take care of things from the basics. This doesn't mean we are going to eliminate helping each other as a community. It does not eliminate maombolezo. But let me tell you, your maombolezos are very different when money is not an issue. You actually celebrate that person's life versus focusing on money. When money is an issue, you can't think of it. You can't even think of that person. You're only thinking of, how are we going to get this money?
Yeah.
Yes.
Wow. Thank you so much, Carol. You have enlightened most of us.
Thank you.
And we appreciate you. It was 1 hour worth of learning.
Thank you. And when you post it, I'm going to go back, and if there are questions, people feel free to reach out. And we're here to help.
Sure. I'm going to post it, and you'll get notifications because you have already subscribed.
Yes, I did. So subscribe to Shiko Hope TV if you haven't, people, so that you don't miss any episodes of anything. Ask questions, ask for experts, whatever field you need an expert to come talk about. Subscribe to Shiko Hope TV.
Yes. And that marks the end of this video. And until next time, guys, bye-bye.
Bye-bye.